All right. Good afternoon, good morning, good whatever time it is you're watching this. Okay, welcome to the connections section of the program, and this is really the meat of the opportunity, which is to build yourself a network of investors. And there's really no scenario where knowing more investors is going to be a negative thing in your life. It can only really be a net positive, especially when you learn how to monetize it. So that's kind of where we're going. Um, so look, a lot of the core ideas that I talk about in progressive partnerships is what we're looking at. So I'd strongly recommend reading it. It's a very light read, or listen to the audio version if you want. Both of them should be down there, maybe, or somewhere in this program, so you can find them. And if you want any of the other books, if you go to callumlaing.com and sign up, you'll get sent them every time I send a newsletter. So yeah, progressive partnerships really talks about my journey, how I built various networks and how I monetized them. And it starts with this whole idea that basically any community is valuable to someone if you know how to monetize it. Now, the difference with building a network of investors is that there's another way that you can monetize it, which is the structuring these deals. Um, but I wanted to also, this popped up in my Twitter feed, X feed recently. And one of the things I talk about is you're not building a network of friends. You are building a network that will have value to other people. That's the key criteria. That means you may have to network with people you don't like. However, what you need to understand is that just by bringing people together, you're creating huge value. We kind of have this loneliness epidemic. Um, I think it was Tony Robbins that said we get up on our own, we drive in a car on our own, we sit in a cubicle on our own, we come back and sit on the couch on our own and watch Friends. And so there's a lot of people out there, and especially when you kind of get older, it's quite difficult to meet new people. And so when you create an opportunity for investors and other people to get together and to meet, whether that's online or in person, um, some of them are going to make friends, and that's a great thing. You're providing a great service just by doing that. And look, hopefully, you're also going to meet some incredible people. I'm very lucky that I have a very rich and uh, rich network of friends that I've met through various groups that I've been a part of. So, um, although you're coming at this from the perspective of, look, you're trying to create a network of value, you're trying to monetize this. So anyone that you meet is really a resource for you to utilize. Don't overlook the fact that there's also an opportunity to build some incredible relationships and friendships, not just with you, but with also the people in your network. So it's a social capital is a huge thing, and anyone that helps facilitate that, I think, is doing a very good net good to the world. Um, so look, remember the end goal. The end goal is that we want to have a large number of investors that trust you. So, and ideally, we want that to be around a specific idea, because you're going to have this network of investors that know you. You're going to be connected to the other network leaders in the Guild program. And they're going to come up with deals that would be appropriate for your network. Your network is going to come up with deals that might be appropriate to other people's networks. The bigger your network is, the more opportunities you're going to have. Um, so bear that in mind. But there's also a difference between having a big network and having a network with traction. So a small group typically has very high traction. We One of the videos that I include in this is about a gentleman that has started putting together these little lunches of investors. I think he was talking about 10 to 15 people. And if he does, I think he was planning to do those every quarter. And that's going to be a relatively small group, but there's going to be a high degree of trust and therefore a high degree of traction. What I mean by traction is that they're going to open his emails because they're interested in what he has to say. As opposed to, you might take the approach where, hey, look, I want to be an influencer in this space and I want to have hundreds of thousands of people in my network. And look, it's perfectly valid. And as you've seen, it's very easy to monetize networks that big. The difference is you're going to have low traction. So the more people you have, which is why weirdly an email newsletter that goes out to 100 people often has a much, much higher response rate, certainly as a percentage, but often even in actual terms than somebody that has 10,000 or 100,000 on their newsletter list. So decide pretty early on. And look, you can kind of play around with both. You can see what feels natural to you. If you want to do the big group thing, you do tend to typically need to be a little bit more out there, a little bit more open to building your profile in a much higher profile way. But they obviously gives you more opportunities. One of the things I talk about in progressive partnerships is the way networks work is by being the network leader, what happens is people come to you with opportunities. And not all of those opportunities are going to be right. In fact, the vast majority of those opportunities are going to be something that's completely unhelpful for you. There's no way for you to monetize it. Well, what the best network leaders do is they then push that back into their network. So they say, well, it's not right for me, but let me connect you to this person or this person. Now in GILD, you might be pushing that back into your own network, or you might be pushing it to the wider GILD network. What happens though is as soon as you connect to people, both of those people get value from knowing you. And what that means is that they now owe you a favor, and it becomes sort of a self-fulfilling prophecy. So the more opportunities that you give away, the more people want to be in your network. The more people that are in your network, the more opportunities flow to you, which allows you to give away more opportunities. So it kind of starts to snowball quite quickly, as long as you start with this idea of trying to create value for other people. In the book, I talk about the future methodology. The future methodology is quite useful when you're building this. So I was talking about it in terms of once you've got a network, how you monetize that network. But even if you're just looking to build a network, you need to start with, or first of all, you need to start with your vision of what you're creating. As nobody's going to come and join you unless they know why they're going to come and join you. Once you have that, you want to get really laser focused on who you want to be talking to. So start to have those conversations. And mostly it's about understanding their needs. And that means asking questions. So if it's investors, you might be asking, what was the last thing you invested in? What has worked for you? What hasn't worked for you? What would you like to see more of? Once you've got those first few people in your network, you're now getting traction. And basically, traction means you can move forward. And because you're moving forward, because you've got people in your network, you can actually leverage those people to attract more people. Very few people, I hate to say this, but very few people are going to be interested in just joining your network for the sake of being around you. Nobody's interested in joining my network just for the sake of being around me. The reason that they will join is because of the other people that I bring in, the other people that you bring in, and the opportunities that it creates. So once you start to get a few people in, use that as traction, use that traction as leverage to uplift, to attract more people. Because if you are going out, the first one is the hardest to get. If you're going out to someone and saying, hey, join my network, you're the first person in it, that's a little bit hard. If you're going out to somebody and saying, hey, look, I've got 20 really, really cool people coming to this event on Thursday. I'd love you to come. We've got the head of this company. We've got the marketing director of this company. We've got the investor CIO from this company. And that allows them to say, well, okay, I'm not particularly interested in you, but I am interested in that network, so I'll attend. So uplift to that. Then your job is to refine the proposition. Basically, when you start this, the chances are you're going to be rubbish at articulating it. And that's fine. All we're trying to do at the beginning is just get started. As you get more familiar with the people in your network, you're going to be much, much better able to refine what your proposition is in order to solve the problem that they have. And just by having conversations, so back in the understand level, just by having conversations and learning what they're looking for, what are the challenges they're facing, it allows you to refine your pitch. And then once you've got that refined pitch, you can then expand and take it to the next level. So you're basically always looking to be kind of bouncing up the level. And it comes to sponsorship of this, which I might cover a little bit in the next section, but sponsorship is just one way that you can monetize that. And it's a realization that as soon as you pull together a group of people, they've got value to somebody. Now, the example I give in the book Progressive Partnerships is if there's a bar or a restaurant that is normally dead on a Monday night, generally speaking, they will be very happy if you are able to bring 20 or 30 people in for a couple of hours. And so they might give you the room for free, they might give you discounts on drinks. But basically, there's value, there's inherent value in you bringing that network. And you can kind of leverage that up to make more money from it. You got to kind of understand if you're inviting someone into your network, it's a bit of an abstract concept. So if I think about my network, there's a huge amount of people in my network that don't necessarily view themselves as being in my network. But if I want to monetize them, I have to be able to engage with them in some way. Because if you think about it, I could say Warren Buffett's in my network, but if he's not going to pick up my phone, he's not going to answer my emails, he's really not in my network. So the key thing is people have got to see value, and this is what I was talking about in progressive partnerships is uh, actually what you want to do is get to a point where people want to be in your network. So you don't have to go out chasing them. At the beginning, you do have to go out and find people, but ultimately, as your network builds, more and more people will want to be a part of it because they see that value in it. So provision of value is critical, and then you got to do regular communication. And this is something I am shockingly bad at, as all of my team will tell you. I have a newsletter list. If you go to callumlaing.com and join it, I've got this great newsletter list, got incredible people on it that I've collected over the years. And for large periods of the year, I completely forget about it. So I often go like 6, 9, 12 months without emailing my list at all, which is ridiculous because every time I do, I get amazing results. It's a great way to make money and everything else. The other thing that is very worthwhile thinking about is so when you start getting people into your network, I would highly recommend just sending them a monthly note, or sometimes it might be a weekly note, with just a little bit of information, not selling anything, just updating them. Hey, this is an interesting story I read about investing in my sector, in the sector we're interested in. So you basically want them to know that they're connected to you because everyone is busy. Everyone's focus is fractured amongst a million other things. So you need to keep doing that. The other thing to be conscious of is, and this is something I really struggle with, is I kind of still have it in my mind that people read my emails. The reality is they don't. And so um, most of the time when you send an email, it's going to get missed. It might go to spam, or they might just be busy that day, or like it just disappears. So if you're running an event, you typically need to send 3 or 4 or 5 emails to people to remind them to go to that event. And I always kind of get worried that I'm going to be over communicating and that people are going to unsubscribe. And look, some people will unsubscribe, and that's fine. But for other people, we just have so much going on that we need those constant reminders. So regular communication, and make sure if you, when you're sending that communication, you feel like you're adding value to that individual. Okay. Once you know what sort of investors you want, and for everybody, it's going to be different. Some of you will be looking at angel investors. Some of you will be looking at crypto investors, property, bonds, small cap, oil and gas, it doesn't matter, like whatever it is, there's a couple of ways that you can attract them. And we're mostly going to focus on the first way. So build a network like them. Generally speaking, people like to connect with other people like them. You occasionally get some industries where people get super, super protective about their networks and about who they are. Recruiters are a bit weird like this. No offense to recruiters. I was one once. Um, and they tend to get a little bit funny about meeting other recruiters. But generally speaking, people like to hang out with people like them. The other approach is if you're trying to attract a certain group of people, you build a network of the people that they are attracted to. And so a couple of the interviews that I give in this series with people that have created investment events. And in fact, what they do is they go and build a network of interesting business owners that have got interesting businesses. And it's those interesting businesses with high growth potential that attract the investors that they want to get to. That is a viable option. So I talk to Bill about how he's done this. The other guys that do this incredibly well are an organization called Marcus Evans. So they run regular investment events around the world. What they do, so their business model is actually kind of the reverse. Their business model is to sell companies a chance to meet investors. And so what they do is they go and build a network of investors, that family offices and institutional money, as bait to get people like me to pay 20,000 euros or 25,000 euros, I think it was, to go and speak on stage at their event and to have a little booth and to get like guaranteed 15 meetings or something. So there's a couple of ways of doing it. What I recommend, especially if it's your first time doing this, is just focus on building a network of people like them, but also like what you're interested in. So yeah, if you've got absolutely zero interest in the bond markets, then trying to build a network of bond investors doesn't make a lot of sense. All right. So look, there's a number of ways that we can monetize your network. And I think the point I talk about in progressive partnerships is that any network is valuable. Yeah, if you're a student and you can bring together. So I was captain of our rowing team at Sunderland University, very glamorous. But just being able to pull together 20 people meant that we could get drinks deals, we could get food deals, we could get discounts on clothing, we like all of these things just because there was value in that group that we had. So any network has an inherent value to someone. What I like about the investment space is that the earning potential is literally untapped. When you start putting these deals together, the deals can get bigger and bigger and bigger, and your stake in them can get bigger and bigger and bigger as well. Whereas if you're just looking at kind of the traditional methods of monetizing your network, there's a limit to what you can do. So yeah, if you're charging entrance fees, you might be able, like if you've got good enough speakers, you might be able to get up to a couple of $100, maybe a few $1,000. If you've got some really, really good speakers, if you're really adding massive value, membership fees, typically you're kind of looking at again a few $1,000s for maybe chambers of commerce. I think Tiger 21, which is a network for high net worth individuals, is $30,000 a year. So you've got kind of an upper limit on what people will pay for membership fees. Sponsorship fees, you can do a little bit more as your network grows, but there's always a limit as to what big brands, and basically you have to think about it from their perspective. Are they going to be able to get more out of what they're investing than just keeping the money for themselves? And if the answer is no, then you're not going to be able to go above that price point. Affiliate deals are quite interesting, and I'm going to give just basically there's an affiliate deal that we will do for all of our members so that you can invite people along to the Guild program if they become ambassadors. So if they step up to that higher level, then you will get a kickback on what they spend. You get about 10% of what they spend on the affiliate network. So affiliates is quite an interesting one as long as it's aligned. So as long as you're not trying to sell sell products or services to your network that don't make sense in the context of what they're doing. Because the minute you do that, again, you kind of breach trust. Um, and then the final one is investment deals, and this is what we'll kind of touch on in the next section. And like I said, there really is unlimited earning potential for this in terms of initially. So initially, you basically just put people together and get the goodwill. Then you put people together and cut yourself into the action. And that might be introducer fees, but you might also end up with equity in a deal. So one of the things we do at Unity Group is when an introducer brings a company to us that we then take public, what we do is we have what we call an SPV, a special purpose vehicle, which is an empty company. We put the company in that SPV. We own shares in that SPV, and the introducer also gets shares in that SPV. And then the public listed company acquires the whole SPV. And everyone gets shares in the public company, and obviously shares can go up, shares can go down. The way that we structure our deals with the constrained stock model, which I'll also talk about later, it means that typically the shares only go up, and therefore that can be an incredibly lucrative way to build an asset base in equity. So lots and lots of ways, and you'll see in the forum more and more deals and people talking about how they monetize their deals. That's kind of why I like the investment space. It's sort of you're only limited by your creativity, but the upsides can be really exponential. So look, it's all good to talk about these really big deals. What I would encourage you to do, especially if this is the first time you've sort of been thinking about investor networks, is rather than focus on how do I do $1 million deal, let's focus on how you get your first $10 into the network or $5 into the network. Start building the network. Follow the sort of the plan of going and speaking to a few people, leveraging them to get a few more people. Whether you decide that you just want to have 10 people having coffee once a month, whether you want to go for 50 people and maybe put on a speaker, it's entirely up to you. Do you want to monetize it through entrance fees? Do you want to monetize it through an annual membership? So just on that annual membership thing, one of the things I found with one of my early networks was rather than charge people $20 or whatever to come in, I found it easier to charge people $200 and give them a year's free access. Or I think maybe it was probably like a lower price, whatever it was. But it was easier to get people to make it very attractive for them to buy a lot, because oftentimes they'll be busy, they won't be able to come. And you've kind of got the money up front, which is a good way to do. So however you choose to do it, try and get your first money from somebody within the first 30 days. That might be an entrance fee, it could be a sponsorship fee, whatever it is. But as soon as you do it, as soon as you get your first money from somebody, then make sure you share it in the forum. We'd love to hear it, because until you get your first $5, you can't get your first $50, and until you get your first 50, you can't get your first 500,000, and so on. So let's get started and make sure you share it in the forum.